So, you've decided that you want to be forward thinking and actually start investing for retirement? That's great. It's incredible that you want to lead the 70% of young adults who feel like they are not on track for retirement. And I'm guessing that because you've clicked on this video, you've probably heard something about how investing in a Roth IRA can be a cheat code to building wealth. Or maybe you're just wondering what this bit of alphabet soup means in the world of personal finance. Either way, let's be honest, no one wants to read boring finance jargon from a book. You'd much rather have a simple, thorough, and concise video that teaches you everything you need to know, right? And that's where I come in. My name is Coby Hunter, and in today's video, I'm going to show you what a Roth IRA is, where its name came from, the particular tax advantages of a Roth IRA, and how you can use those characteristics to make you a ton of money. Plus, at the end, I'll show you how to actually go about setting up your Roth IRA. Now, if you guys are interested in learning more about how to improve your personal finances or want to learn more about the business world and how it works, consider clicking that little subscribe button. It's 100% free. I do my very best to answer questions about the world like, are meal kits actually worth it? Why did solar freaking roadways fail? And whether you should lease or buy a car. And I try my very best to make these videos in an unbiased and non-clickbaity way. So now that you've clicked subscribe, let's jump in. Let's start with what a Roth IRA is. IRA stands for Individual Retirement Account, and the Roth part refers to William Roth, a Delaware senator who fought to increase everyday people's access to retirement accounts, and who the account is obviously named after. A Roth IRA is a kind of retirement account that gets special tax advantages from the government. Once you put money into your Roth IRA, you can buy and sell stocks, and as long as you don't take the money out before you're 59 and a half, don't ask me why that is, but that's the number, the US government will not tax the increase on those investments. Whether you invest $100 and it turns into $1,000, or you invest $2,000 which becomes $5 billion like this guy did, you don't have to pay a penny in taxes. This tax-free investing sounds like a great deal, right? Well, it sounds like a great deal because it is a great deal. Typically, gains made in the stock market would be taxed at a 20% long-term capital gains tax rate. So any money you earn in a Roth IRA will be more money in your pocket than if you were to use a standard investment account. For example, let's say that you maxed out your Roth IRA each year, which means you put in a little over $500 a month, and it grew at the same rate as the S&P 500 for about 40 years. At the end of that time frame, you would have invested about $250,000, but your portfolio would be worth about $2.8 million, which means you would have a profit of about $2.5 million. Now, if you hadn't done this in a Roth IRA, you would be on the hook for about $500,000 in taxes. So, just to make sure you've got it, for a Roth IRA, you pay taxes now, and then as long as you take it out when you're older than 59 and a half, no taxes. This is different from a standard IRA with no Roth in front of it, because with a standard IRA, you're supposed to put your pre-tax dollars in and then pay taxes on the gains like their income when you take the money out in retirement. Some other key details you should know about Roth IRAs are that first, you can put a maximum amount of $6,500 in one each year. Second, pretty much any investment company or bank like Fidelity, Charles Schwab, TD Ameritrade, or anybody like that offers Roth IRAs as part of their services. Third, in a Roth IRA, you can buy stocks, bonds, ETFs, mutual funds, cryptocurrency, or CDs. And if you don't really understand what half those words were, don't worry, click that subscribe button as I'll have more videos explaining these topics coming out in the next couple of weeks. Or you could always ask a certified financial planner and they could help you out too, but that costs a pretty penny, so pick your poison, I guess. Fourth, there's a limit to how much money you can make in a year and still put money into your Roth IRA. And that limit is $153,000 if you're single and $228,000 if you're married. So now you know what a Roth IRA is, why should you invest in it? And are there any times that it's better not to invest in a Roth IRA? Since you have to put after-tax money into your Roth IRA, unlike a 401k or traditional IRA where you put pre-tax money in and reduce your taxable income right now, the general idea behind using a Roth IRA is that you'll probably be making less money now and therefore be taxed less now than when you're in your 60s. Because obviously by the time you're 60, you'll have had all those years to work your way up the pay ladder. So, for example, if you're making $40,000 a year now, your post-tax money will be taxed a lot less than if you're making $200,000 a year at 60. A super awesome hack here is if you're fortunate enough to be in college and still have things like your housing, food, or tuition already paid for, whether that's because you've got scholarships, you've got family, or whatever, you can take that summer job money and rather than buying sick Air Force Ones, invest it. In this situation, you won't have to pay pretty much any income tax on your income because as far as the government is concerned, you are living well underneath the poverty line. But because you live at home or something like that, a huge portion of your expenses are entirely eliminated. So if you do this for every year of college, you could have a nice little nest egg of $26,000 invested without having that money ever taxed. Finally, the last part and probably the most useful part is how do you set up a Roth IRA? It's about as simple as opening a bank account. You pick which company you want to use, for example, I like using Fidelity, and then you go to their website, click Retirement and IRAs or whatever similar thing they have there, and then click Open an Account. At this point, you'll provide some personal information and connect a bank account to it so you can actually transfer money into your Roth IRA. Now, if you need help with the nitty and gritty of signing up for any of these services, all of these companies have staff that you can call up and they'll walk you right through it. But since I'm pretty sure you've probably set up a Venmo account in your life, this really isn't that different. Once you transfer money into your account, you can buy whatever stocks or bonds you'd like. But most people will be best off investing in a diversified S&P 500 exchange traded fund, or ETF for short. The S&P 500 is like a basket of stocks representing the 500 best companies in the United States. And an S&P 500 ETF is an amazing way to invest in the general US economy as a whole because of its diversification. Plus, over its existence, it's averaged an annual return of about 10%. Even if the S&P 500 underperforms over the next 40 years, if you max out your Roth IRA by putting $6,500 in it each year, you'd have invested about $260,000. But your money would be worth a staggering $1.6 million, which is an amazing nest egg for retirement. Now, if you'd like to know the best S&P 500 ETFs, I'll put a link in the description below. But the most important thing you're going to hear today is that you need to have a long-term mindset when investing for the long term. When you invest your money, whether it be weekly, bi-weekly, or monthly, after you buy, just close the app and don't look at it again until you come back to buy. Whether the market is up by 2% today or down by 2% today, it really doesn't matter. Checking your stocks daily will just add a lot of additional stress to your life that you don't need. No one can time the market, and anyone who tells you that they can is going to be selling you something. So the best thing to do is just invest consistently and trust that the market will go up over time. Now, I know that this probably felt like a lot, so if you have any questions, feel free to put them in the comments below, and I'll do my best to answer them. And if you want to learn more about personal finance, I have a playlist right here that talks about everything from 401ks to restricted stock units. And before you leave, don't forget to subscribe. Thank you guys so much for watching, and I'll see you guys next time.